So when Ben Bernanke was chair, they started to engage in what's called quantitative easing, which is basically open market operations, just like they did before, but on a much bigger level. And to put it into perspective, the Fed's balance sheet, meaning the amount of assets that the Fed held, was a little under 900 billion going into the financial crisis. It exploded well into the trillions. I think the Fed's balance sheet about quadrupled for a while. And then in the mid 2000s or so, they began to taper, meaning that they were reducing the amount of purchases that they were making, and then they were letting the balance sheet run off. So they were letting securities that were maturing just mature without replacing them, and this shrunk the balance sheet. So with quantitative easing, I should note that they were buying longer term treasuries and they were buying mortgage securities. Those were the two primary types of assets that they were buying with quantitative easing. Then the pandemic hits. When the pandemic hits, the Fed engages in another um, massive several rounds of quantitative easing. The balance sheet ballooned up. I think it reached a high of about 9 trillion in 2021. And then when inflation starts to hit, not only does the Federal Reserve try to tighten monetary conditions with higher interest rates, which they began doing in 2022, but they also started to shrink the balance sheet, or what they called balance sheet runoff. And what that meant is that as these securities would mature, they would not replace them. So the balance sheet, the Fed's balance sheet, the assets that it owns, has gone from about 9 trillion. I think it's about 6.5 trillion today. So what the Fed has said is that they're no longer going to engage in this balance sheet runoff or what's called quantitative tightening.